Good evening, all. Ira Epstein, and here we are with your Spider ETF stock market wrap-up for a crazy trading day again. And this is for Wednesday, the 15th of March, 2023. Now, tomorrow morning, the first big central banker, Miss Lagarde of the European Central Bank, has to announce what her country, her zone, it's not even a country, it's a zone, what the Eurozone is going to do on interest rates. She sort of cemented her foot into a problem by saying at the last meeting she was going to have 2 more rate hikes of 50 basis points each. She has some cover with all the flack that's gone on, obviously, but more important, inflation is collapsing, a key component of it at least, in terms of energy, which has taken a major nosedive. It has gotten to the point where for us in America, our president has said that under $70, he was going to start replenishing the oil that he took out, ordered taken out, to help his campaign and fight inflation at the $90 area, 85, and he was going to do it under 70 and begin the replenishing. We're $68 plus. Mr. President, replenish. It's called a strategic reserve. Got it? It's not meant to go for other events, and it needs to be replaced. You're not good enough to know if it's going to $50, $40, or back to 90. Do what you said you would do. Okay. Now, the other issue that's happening is we're turning stones over on the ground. We're picking up each one and saying which bank is good everywhere, including around the world. So Credit Suisse, we wake up this morning to a new problem. Now, let's understand, this is a terribly mismanaged bank. It's always in a scandal, always paying a fine. Just go back, you don't have to believe me, Google it, and come to your own conclusion. So this morning I saw that there was an interview with the head of the Saudi banking committees, the investments that they have in Credit Suisse, and they own 9.8% of the stock. And they're asking if they're going to put more money into it because the bank needs some capital, apparently. And he said no. And all of a sudden, the horns in my head went up. I went, no. What's that going to mean to the market? Well, as the day unfolded, we found out what it means, to the point where the Swiss National Bank, their equivalent of our Fed, their backstop, their central bank, had to come in and offer that if needed, it's crazy wording, offer if needed that they'll be the backstop. There were talks, rumors, that UBS was going to be involved. But if I'm UBS, why do I want any part of Credit Suisse here? Let the pain go on. If I want them, I'll get them at a big discount. It's like our banks, Bank of America. They said they got $15 billion in deposits over the past several days, probably out of the banks that are failing in America, right? So why buy that bank? Now, you'll say because you're buying the business, and I'm agreeing. You can buy the business, and you should, if that's the business you want to be in. Now, it doesn't mean that the big boys want to be in that business. You do understand that, right? They may not have the stomach for tech startups. I doubt they do. I think there's a reason that you find these niche banks, but people don't say that in the press. I don't see that all of a sudden Mr. Diamond says, hey, we're going to go into the tech startup business. I just don't see it. So I can see another tier bank, but why not get them on the cheap? Now, the interesting thing that's also going on, did you read that SVB, under some covenants, I didn't realize this, has the right to tell the people that took their money to bring it back. You got a loan from the bank. We want you, and you have to do banking here. And now you've broken that covenant. Give us our money back. You're going to say, are you out of your mind? I'd rather spend my days in court fighting with you than give you my money and I don't know where my security is. Then the government can step in and say, we are guaranteeing it. We want you to do that. And that could be how you piece together enough parts to it to make a sale somewhere. I don't know. I read what's going on. I'm not an attorney, but I read a lot. And that's an interesting part. Does that mean you'd have to bring back your own personal fortune? I don't know. I don't know what the covenant said, but it's interesting that that was in some of the loans, which makes sense. If I'm going to give you money, I don't want you doing business at Bank of America or JP Morgan. I want it done at my bank. Makes a lot of sense. All right. So Next week, we have our bank. We have our central bank. So what is Mr. Powell going to do? Do yourself a favor and go to the Chicago Mercantile Exchange Group's page. It's called Fed Watch page. One word, Fed Watch, and then page, separate word. And you will see the probabilities of what interest rates do. Now, you can watch this and lose your mind watching it because it's like betting on March Madness right now. A week ago, the probabilities were hitting 70% plus that we were going to get a 50 basis point hike. This week, as it started happening, just the other day, we were 62%. That was off the table. Then it was 65, 67% for a 25 basis point hike. At 3 o'clock today, and it's in my newsletter for tonight, the probabilities are near less than 50% for a 25 and higher than that for no rate hike at all. This is called the emotion of the market. You're seeing how the bettors, if you will, the people putting on long, short positions, what they're doing in the marketplace. And it's always good to watch and get a feel for what the market is looking like. Every single newscast carries it. So if you're on Fox, if you're on Bloomberg, if you're at CNBC, they will talk about these probabilities and they will show you what they are always as you lead up to to what the Fed is going to do or not going to do, as it turns out. Okay. When we take a look at Schwab, as I said, the market filled the gap. Now, this is a pause. If the market takes out, in my opinion, not today, but the day before's, that would be Tuesday's high, it would certainly start to look as though you're going to have higher lows and a higher high. Then the key is not to take out today's low again. And what would be the target? Maybe these moving averages. So it could be that the worst is over there. You're getting the potential for it. Is this a bullish trade? It isn't, for one reason. One of the filters that I employ is that when you're underneath the 18-day average of closes in red, I'm looking for potential sells, not buys. So I don't do it. But I have plenty of reasons not to be short. And you'll say, well, what are they? Well, a couple of things. First, right here, I've just had a crossover where the 18 got under the 200. It's not under the 100, but this is an awful lot of resistance. Number two, you hit the Bollinger Bands. And once you got back over them out of that panic, that's it. What else did the market do? Let's step back and do this together. Yesterday, Tuesday, both numbers, were they under 20? No. What about the day before? Yep. Day before. Yep. And the day before. So follow me. Ready? If you've taken my enhanced Bollinger Band course, I teach you that when you get 3 days in a row, you're embedding, you're locking in. So you have 1, 2, 3. If you lose it, the odds favor, and that's what you did, that number one, that bear play is over. Number two, until you take out the most recent low, the odds favor that you're going to make a run at the closest moving average. Doesn't mean I'll be right, but that's exactly what the play is. Okay, so I have reasons to no longer be short. I can make the argument, I can see what the bulls might be trying to do, but I have no reason to participate in it. By the way, if you like how I do all this, I ask one favor of you, because this is free, right? At least give me a thumbs up. It helps the algorithms for us over at YouTube, and we get more and more viewers from that. Tell your friends about us, too. All right, in UGA, here's what you've done in gasoline. You've gone from the upper to the lower Bollinger Band. Has the driving season seasonality changed? It has not. Did we have a nor'easter just now? Sure. And if you're not in New York City or Boston and you just go to the suburbs, you see how much snow they have. 200,000 people are without electricity. We're going to have more snow coming through the Midwest right now. It's March 15th. It is too soon to get ready for that play, but it's doing it. What it's doing is it is making this trading band that you're seeing here where the market's winding its price up. I'll bet you that over the next few days, you're back up above the lower band and in between that and the 18-day average. It's just got all the setup for it. It's already oversold and you're back down to it. NVIDIA. If NVIDIA can clear the highs of Tuesday, maybe you go to the upper band, but you're overbought in a sideways pattern I don't know that you have the power to come out to the top side. You need to embed. You have to get this pattern in order to tell me that you can keep pushing that band to the upside. In Tesla, I think the short's covered right here. And the market is now trying to correct an oversold condition. The trend is clearly down, similar to Schwab. If the market takes out Tuesday's high, I can make an argument that the market held the combination of the Bollinger Band and the 100-day average of closes in an oversold condition where I think the pros came out, and the next target might be 192.13. In XLF, this has got an embedded reading, so good rallies in it. Good rallies are still sales, but you'd never sell under a Bollinger Band. At least I wouldn't have any client of mine do that. And typically you don't go more than 5 days under a band. So if we come back a little bit together, yesterday the market closed at 32.27 and the lower band was 32.25. So this can just latch onto that band, and if it wants, just keep driving prices lower. Why? Because you're embedded and you didn't have 5 days in a row under the band. Now you're just riding the band. Until it's over, folks, it ain't over. There's a way to get short on good rallies if it gives it to you. I teach that in the Enhanced Bollinger Band course. The next thing that we have on the chart, the XLI. Okay, oversold as can be. First challenge did not hold of the 100-day average in the Bollinger Band, but that's where I think the smart money came out. This is what I call that add-on value. You know, you're catching this. Now, why is the industrial sector falling? Are you paying attention to what the New York Empire reading or any of these current readings are coming out and PPI numbers? There's weakening all through the manufacturing sector. It's spread out of housing finally, and it's in manufacturing. This is what's weighing on the market. It still doesn't make it a short sale, in my opinion, underneath the Bollinger Band. I think the pros will wait to get bounces in the market, but there's nothing other than it's oversold and under the band. The market momentum is clearly down. In stocks, I said I thought you were going to go sideways because you've wrapped your arms around price with the Bollinger Band narrowing in, and you seem to be stuck at the 18-day average. I still feel that way. In the home builders, I am surprised that they're not seeing a little more action that's positive. Why? What are interest rates doing? Did you see the mortgage numbers today? Every category went up. So people got aggressive on the week of the 10th. What do you think they're going to be this week? If I'm on the phone with every service. What's that mortgage rate doing now? What's it? I'm watching interest rates. They're coming down. What can you do? Can you do better than that? That's what they're doing. And why? This is the housing season. This is when you want to go out and buy homes. Are you not getting more emails about it, or your mailbox not getting areas that are there? That's what people do. That's how you drive the business at this time. But the trend is down. It's riding the band. Too soon to even think it. If you're thinking anything, you're thinking of coming out of shorts, but I don't see it as a buy yet. In the energy sector, whoa. Why? Because the lag effect is caught up in some economies to these rising rates. That's what you got to think. Or you broke the market. What do I mean? You rose the rate so much that you broke the banking system. Can you deny that? I don't think so. So, if that's the case, are people going to keep buying? You know, consumer spending dropping. Retail sales, did you look at them at all today? Dropping a bit. So the consumer's a little bit concerned, and that's a good thing to have happened. This is what the Fed wants to see. And the Fed's looking at all this, trying to decide how much further do they have to go in the rates. We'll find out next week as they give us the reading. Gold's a panic trade. You know that. Is the banking system going down? Is the stock market's crashing dramatically? The word is dramatically. This gets the bid. Would I ever tell my clients to buy it over a Bollinger Band? I assure you it's not going to happen, and you'll say, look at how much you missed, and I go, fine. What about the times where I told you cover there, coming out of different parts? This was embedded, so this play made all the sense in the world. No, I'll stick with what I know because I'm comfortable with it from the clients that want to be with me. SLV, as far as I'm concerned today, was out of town. Get away. You're at the 100-day average, the upper Bollinger Band, you're overbought. You've stretched the market. It's time to take money off the table. Copper. This one I've been right on. I said China is the market. They haven't done anything to support the market, and away you go. And that's it. But between where it's at and the 200-day average, I don't see much lower than that. The world isn't ending. The banking system didn't crash. Certain banks got in trouble. The stock market's in trouble. But more central banks than not are paying heed to all this that's going on, and they're trying to find ways to no longer do these rate hikes. And if we get to that point, and that is the point, then these markets need to heal, and then they come back at you the other way. In TLT, you went up to the 200-day average. As far as I'm concerned, that's it. You just keep hitting the Bollinger Band in that, and you've got a problem. I don't think the pros are doing anything there. UUP, this is the dollar. You're just walking back and forth. And FXE, what a wild trade. 240-point range today in the euro from high to low. You never see that. Go on the chart. Find me where you do that in one day. You can do it in 2-3-day period, not in a 1-day period. And you've basically gone from the upper band to the lower band, and you're not trending either way. If you came out there, if you dropped here and you're at 97.07 is the 100-day average, you hit 09, what are you hanging around for? I mean, you're in the ballpark and you were, doesn't make any sense. So I look at all this and I say, okay, there's going to be a lot of trade opportunity out of this. I mean, a lot of trade opportunity. This is the washout of the market. Then from here, the structures start coming back in and the plays begin again. You want to see my take on it? Join me in the morning. In my morning, not these, my morning Spider ETF stock market, where I go through 40 charts with you and we unroll the charts. We're always adding and subtracting different things and playing with them. How do you do it? Come up here, go to the research section, just click on that. You'll be there in no time at all, and away you go. I'm Ira Epstein. You have a good day. Hope to see you first thing in the morning.